Volume indicators are tools traders use to understand how much activity is behind a price move. One of the most common is simple volume, which shows the number of shares, contracts, or units traded during a period. Rising volume often suggests stronger conviction, while falling volume can signal weaker interest. On balance volume, or OBEV, adds volume on up days and subtracts it on down days. Traders watch whether OBEV confirms price trends or diverges from them. A rising OBEV can support bullish momentum, while a falling OBEV may hint at selling pressure. Volume-weighted average price, or VWAP, is another widely used indicator. It estimates the average price a security has traded at during the day, weighted by volume. Institutions often use it as a reference point for execution, support, or resistance. Accumulation distribution line combines price and volume to show whether money is flowing into or out of a security. A rising line suggests accumulation, while a declining line suggests distribution. It is useful for spotting hidden strength or weakness. Chaikin money flow, or CMF, measures buying and selling pressure over a set period by comparing where the price closes within its range and multiplying that by volume. Positive readings suggest accumulation, and negative readings suggest distribution. Money Flow Index, or MFI, acts like a volume-based version of RSI. It uses both price and volume to show overbought or oversold conditions. High readings can indicate overbought conditions, while low readings may point to oversold conditions. Volume rate of change measures how quickly volume is increasing or decreasing over time. A sudden spike can reveal breakout interest or panic activity, depending on the context. Traders often combine these indicators instead of relying on one alone. Volume confirms whether a move has participation, and the right indicator can help reveal whether that participation is supporting the trend or warning that it may fade.